unique time for the markets and the world dealing with this pandemic. And we've talked about how much it's affected travel related industries. But the one that's, almost so obvious that it's overlooked sometimes is how it's impacted the healthcare space. And in not all ways has it been positive. Is obviously, more people sick, you think more people may be going to the doctor, but in some ways it's not the case, as other less necessary things have been pushed off until capacities are there. And so I'm interested to see what you saw in healthcare in general, and of course United Healthcare Group reporting earnings tomorrow morning before the market opens.
Yeah, so I mean, right now going to the doctor, the sentiment on social media is super mixed. But to kind of dive into, like you mentioned, a specific name, United Health, they're up about 1.5% year to date, but they have fallen about a little bit over 1% month to date. But more importantly, this stock has recovered about 40% from its March lows. So they really operate in two segments. You have, of course, United Healthcare, and which is their healthcare coverage, and Optum, which focuses more on the technology healthcare services side of things. Now, when it comes to healthcare, of course, you just mentioned kind of the buzzword is coronavirus. Everyone wants to know how your company in healthcare will contribute to this race to a cure we've been seeing that kind of has the ability to, spike or really hurt your name. So when it comes to coronavirus, United Health recently announced a new therapy called Level 2, which integrates digital technology and human health support. Now, this was personalized for people with type 2 diabetes, however, can also offer predictive measures for coronavirus infection. And more interesting enough, I saw that United Health developed a new FDA-approved Schwab protocol, which has improved efficiency and safety while testing. And of course, this offered a solution to an issue we saw for so many months, which was not enough tests. And some of the tests we were seeing for the coronavirus pandemic were inaccurate. Now, when you're looking at the healthcare sector in general, it's fallen about 1% year to date, but more importantly than that, it's risen about 27% off its March 23rd lows. So we've seen kind of a rebound since March in the healthcare sector, along with the broader market. Now, when you're looking again specifically at United Health on Twitter this morning, sentiment going into second quarter earnings is super positive. So our first tweet really focuses on their first quarter results. Our first tweeter says, United Health, very bullish name right now in healthcare insurance sector. This is about to take out all-time highs soon. Good amount of call flow seen in July, 320 calls yesterday, and May 260 and 330 calls last week. Good earnings provided by company last week. Now, this is, of course, back when they reported their first quarter results, which were really strong. Now we're waiting, of course, for second quarter results, which is before the market open tomorrow. But Alex, you mentioned something really interesting that we touched on in the beginning, which is going to the doctor. Now, sentiment around that on social media is a little mixed, and with United Health being kind of an insurance provider, it ties nicely into my next tweet, which is in response to some positive things that the tweeter could do going into the next year. So this tweeter responds and says, improving my mental health, being an adult and going to the doctor for the first time in 11 years, and getting a checkup and shot updates while I still have insurance before I turn 26. So I could relate to that personally, because 26 is that, magic year when you get kicked off your parents' insurance. But when you look at healthcare names in general, Kevin, like a United Health before earnings, I mean, these are names that have seen so much volatility. How do you go about trading some of them?
Yeah, Jenny, it's interesting. And this is an interesting conversation because all the focus during the coronavirus has been on the pharmaceutical companies and all the biotech companies looking for a cure. What really got underreported was how the people stopped going to the doctor, and emergency rooms and other clinics and places like that were actually really slow because people didn't want to go anywhere near a hospital or a doctor's office. So, you see in United Healthcare, the stock and how it dipped during that period. Now everything dipped, but it's amazing to me that during the coronavirus and that slowdown in patients going to doctors in general, that this stock has come pretty much all the way back from its sell-off in March. So I'll be interesting. Remember, having good first quarter earnings may be a kind of a misread, because this second quarter is when we were in the midst of this, right? So, I think this is going to be a volatile number. I think this is one we really have to look at. There's a lot of speculation on what I feel, frankly, is a very underreported issue with the pandemic crisis, and that is traditional healthcare, guys.
Yeah, I'm glad I got you alongside me for this one, Kevin, as I think the healthcare space in general is already one of the most complex sectors. And then you throw in the pandemic and it really just has question marks all over. But Jenny, we got to say goodbye. Great stuff as always. Hopefully this will be able to help us digest this. As we say goodbye to Jenny, we want to welcome in Andy Swan, the co-founder of LikeFolio.com. Andy, I'm hoping you're going to be able to throw some insight to this as well, because like I said, I've always thought of the healthcare space because you have the biotech companies, you got the insurance companies, you got the companies that are making the technology, that everything gets very, very cloudy very quickly in this particular sector if you're not super in tune with what's going on. And you throw a giant, pandemic across the world and you change the dynamics of how hospitals operate. And it makes it very, very interesting to see how things are going to be navigated. I mean, we've read stories, I'm sure you've seen them as well, as in some areas, doctors and surgeons and the like being furloughed because, well, there isn't elective surgeries right now, that there isn't, the regular checkups going on, or at least that's how it was a couple months ago, in anticipation of what may happen because of the pandemic. And it's really just pretty crazy, Andy, with everything going on. I'm interested to see, how you approach tracking this on social media and what you've seen.
Yeah, for this, we really wanted to look at, just a consumer behavior. So with LikeFolio, most of the time we're looking at the way people talk about brands and products that are owned by publicly traded companies. But for this, people don't talk about their providers that much. They don't get very specific when they talk about these things online. But what they do talk about are their behaviors. And one of those behaviors that we wanted to track was how many people are indicating that they're avoiding going to the doctor or avoiding regular medical care that they would normally participate in. And you can see that number has spiked incredibly and is still, even after the panic of the initial pandemic worries, is still, double or triple its baseline in terms of people talking about avoiding going to the doctor. And we saw this in Walgreens' report, I believe last week, where they essentially came out and said, people aren't going to the doctor, they aren't getting prescriptions filled, so our revenues are down and our costs are up because we have to clean all the stores in all of these ways. And so Walgreens was down. That makes me think, insurance providers are probably paying out a lot less than they're used to paying out. But on the other side of the coin, you've got a lot of people losing jobs. You got a lot of people potentially losing insurance, running out of money, and a lot of bad things happening on the demand front for signing up for these insurance programs. So there's a lot of conflicting information there. But I think to us, the most compelling chart we could find was, this absolute avoidance of medical care that the world, and at least in the United States, that people are going through. Probably one of the first, if not the only, pandemics in history where tumbleweed is flowing through the hallways of the hospitals and doctors' offices.
Andy, this information that you're giving is kind of running counter to what United Healthcare stock has been doing. It did its initial sell-off when the whole market sold off, but it's worked its way back at or near all-time highs when you're talking about what we feared when we started this segment, which was people have stopped going to the doctor, and going to a hospital or going to a doctor's office scares people enough where their behavior is changing. Don't you think that has to show up in earnings? I mean, which has it wrong, I guess is what I'm saying. Is the data, not showing the fact, or is the stock actually getting it wrong? Should United Healthcare stock be rallying back up at near all-time highs if what you're saying is happening, which is people are avoiding going to the doctor?
Well, I think that the costs of that insurers are paying out is definitely dropping if people are avoiding these, and the revenue for hospitals is dropping. And so you have a big mix there. I think when people are avoiding the doctor and avoiding healthcare, I hate to look at it on a short-term basis, to be honest, because I think what happens is things get delayed. I'm not a doctor, I'm not a medical expert, but I will say that it is very concerning from a full medical community perspective and as a citizen that so many people are avoiding their normal medical care. And that tends to end up bad for the individual. It tends to end up bad for society down the road. And so I think that we'll see whatever, these companies talk about happening right now. I think that a lot of consumers of healthcare are kicking the can down the road, and there's going to be an explosion of necessary, immediate medical need at the same time that people are out of work and having a financial struggle. And I think that's the real challenge that these companies will be talking about. I think it's going to be about the guidance that they can give, going forward, because the last 3 months kind of doesn't matter. It's about the future, and I don't think anyone can give a really clear vision of that in the healthcare industry. Like Alex was talking about, it's an extremely cloudy, complicated industry as it is, but throwing this wrench into the works, makes it really difficult to figure out for anybody, the companies themselves or investors like us.
Andy, there's been a lot of information here. I've just been trying to take it all in, but I think that I actually came up with, I think this was the exact way that it needed to be looked at, because to your point, the individual maybe isn't going to talk about whether they have United Healthcare or a competitor, as it's probably not a choice they really make, especially if they're working for an employer who, they're just a part of that employer's plan. So, a lot of, the consumers that are involved with these different insurance companies, if somebody who's unemployed and they're furloughed, maybe that'll impact it obviously to some extent. But for the most part, there's not a lot of shifting around between the insurance companies. But to your point, if there's less people going, at least right now, those companies are maybe actually spending less. So they're still getting those premiums and things on a monthly basis for those who are still employed, but maybe it's just a push down the road. And then, Andy, the question is, to your point, if it's a more of a necessity care, an emergency type of a situation, is that more expensive than the preventative care that normally typically would have been taking place right now if the pandemic wasn't taking place? So there's just so many variables in this space right now that it's almost impossible to suggest one way or another, because, if the pandemic suddenly isn't a thing anymore in a month, how much of these consumer behaviors kind of snap back? Or is there always going to be that lingering, hey, well, what if something happens? What if it comes back in a couple of weeks? There's just so many things. So, Andy, when you think about this space in a whole, is it too uncertain to do anything in there from a LikeFolio perspective? Or is this one where it's only a long-term kind of an outlook?
Yeah, I think it's only long-term. I think that you really have to know the industry. Someone like me can come on here and tell you pretty accurately with some strong conviction what consumer behaviors are like, but an outlook for the entire medical industry is not something that I'm going to be able to give. And as an investor and potential investor in these companies, very difficult for me to figure out even if I tried. And so I think when I think about the healthcare industry, I think, okay, that's outside of my wheelhouse of expertise. I try to get an advantage where I can on certain things, and the healthcare industry is one of those. It's very difficult for me to do that. Now, maybe I want some of these companies in a portfolio in a long-term process that I have established, diversified with some other names that I'm going to hold on for a long time, buy on the dips, all that kind of classic advice, I think, is probably pretty good right now, because as we sit here and talk, you can almost feel the uncertainty. It's kind of like we talked about with airlines and travel. The same is probably true for healthcare, except for one thing. In travel, if you missed this year's vacation, that doesn't mean that in the fall you're going to have to go take a vacation or you're going to have to go travel. With healthcare, if you avoid the doctor's office, if you avoid a procedure or a checkup, it does mean that you're going to have to get that checkup, you're going to have to get that procedure, and it's possibly going to be worse or more of an emergency situation. And so I think that whatever is happening right now in terms of the slack of demand that may be happening right now, I think that comes back in a very big way, very fast. And I hope our medical community is prepared for that, because I think it could be fast and furious, and I think that the insurers are going to have a tough time keeping up with it and pricing accordingly.